Hello, everybody. Welcome to the Unum benefits. Today we have Ben on the phone with Unum, and he's going to go over the great benefits that will be effective July 1st. So as everybody probably already knows, the Sun Life benefits will terminate at the end of this month. So we're just going to go over the benefits. So Ben is going to briefly go over all of the benefits, and I will interject if there's any changes that I need to point out. And then I'm also going to speak to how everybody will be enrolled in the employer-paid coverages. Ben?
All right. Hey, everybody. So I'll run through this pretty quickly, but if you have any questions, obviously we can circle back later. The first thing I'll run through is our life insurance here. So just by nature of the fact that you work at Stockmens, they do provide $10,000 of life insurance to you, which is a pretty great benefit. Obviously, we don't get life insurance for us. It's for the ones that we care about most if something unexpected were to happen to ourselves. So in the event that something unfortunate happens and you were to pass away, your loved ones and your beneficiaries would receive a $10,000 life insurance benefit. If you were to pass away in an accident, that benefit will double to pay a $20,000. Now, for all of us, our varying levels of coverage are going to be different because nobody has the same situation. So on top of the $10,000 that Stockmens already provides for you on an employer-funded basis, you also have the ability to buy a voluntary coverage. So essentially what this is going to do is if you want more than the $10,000, you have the ability to insure both yourself, your independent spouse, as well as your children up to age 26. Now, a couple quick points on that. Getting coverage through your employer is always going to be one of the best ways to get life coverage, even if it is voluntary. Being that risk is spread out amongst everybody, you're going to get more competitive rates, and you're also going to get better plan designs. So just taking a quick kind of look through here, as an employee, you have the ability to get up to 5 times your salary to a max of $500,000. Your spouse can get up to as much as you as the employee elect, and then your children can get up to $10,000 no matter how many kids you have. Now, within that, there's something called a guarantee issue component. So the way the guarantee issue works is it's essentially the amount of coverage that you're able to get without answering any medical questions. So on employees, that's going to be $70,000. For spouse, it's going to be $15,000. And for children, it's going to be full guarantee issue at that $10,000. Now, the one single most important thing to know about across any of our product lines is something that you have on this voluntary life called the lock-in feature. The way that works is anybody who purchases the minimum at this initial enrollment has the ability to increase up to the guarantee issue at every future enrollment without answering medical questions. So what that looks like in practice, what I recommend if anyone's on the fence is typically get the minimum on yourself, that's $10,000, get the minimum on your spouse, that's $5,000, and then get the full $10,000 on your children because it's something that most people aren't going out and getting coverage for. So for most of you, that'll come out to probably $5 to $10 per paycheck to cover all of those needs. And down the road, if anything happens with your health status or anything with your dependents, you're always going to have the ability to increase up to that guarantee issue without answering medical questions. Now, that is a really phenomenal benefit because if you don't have that and your health status changes, it could be very hard, if not impossible, to get life insurance down the road on a voluntary basis. Leticia, did you have anything you wanted to add?
Yes, the only thing I want to add is make sure that you update your beneficiary form for the employer-paid life insurance. You will all receive a form, make sure it's complete, and then send it to Judy. So she will house that or send it to us and we'll house that here. Additionally, if you elect any of the voluntary life insurance, make sure you fill that form out completely as well. And do not forget that beneficiary section as well. So very important there. So we're going to move on to the employer-paid short-term disability. This is a change to current. Right now, under the Sun Life policy, the employee must elect a short-term option, which is 100% paid by the employee. So Stockmens reviewed the needs of their employees and decided it would be a benefit to offer an employer-paid disability insurance. And Ben will speak briefly about the short-term disability.
Great. So short-term disability is one of the single most important benefits that you can have, because ultimately what you're insuring through disability is your most important asset as an individual, and that's your ability to earn an income. We tend to think that we're protected, for all the different things we run into, whether it's sickness through our health insurance, our property through our home and auto, et cetera. But at the end of the day, we fund our ability to cover ourselves through our ability to work. So that's ultimately what you're protecting through disability. As Leticia mentioned, Stockmens is providing short-term disability to you because they understand that need. And again, this isn't necessarily a common benefit to be funded by employers. So it's pretty impactful that they're providing that. Now, in terms of the nuts and bolts of your plan, the way that's going to work, the most important thing for you as an individual to know about is that section on the chart that says elimination period. What this means is after 14 calendar days of being injured or sick and causing to become disabled, you may be eligible for benefits. So essentially that's going to be any sickness or any off-job accident that causes you to miss work or the ability to continue earning. Now, if that does happen and you do qualify for disability, you're going to begin receiving 60% of your paycheck up to a weekly maximum of $1,600. So the way you can figure that out for yourself is just take your weekly paycheck that you're currently getting, multiply it times 60%, and if something were to happen to you, that is the paycheck that you would receive while you were out on disability. You do have the ability to use sick time, PTO, anything like that you have available on top of your disability benefit. Now, the other key piece to know about this is by far the most common disability is going to be pregnancy. So the way the pregnancy works is once you satisfy the 2-week elimination period, for the next 4 weeks, you're actually going to receive your disability benefit. So it's going to be that 60% income replacement. That's, again, it's the most common claim by far, but it could also cover other pretty common things such as joint disorders, back disorders, digestive things, really anything that might cause you to miss work and would impact your income. Now, the kind of general overarching theme that I tell people when you're considering this coverage is just make sure that you have at a very bare minimum 2 weeks expenses saved in your bank account. Obviously, it's ideal to have more, but at a bare minimum, focus on getting at least those 14 days because in theory, if you qualify for disability, those 14 days in savings will get you to the point that you're now receiving disability income, and then you can count on some income while you're going through that kind of rehab return to work process. Leticia, anything to add there?
That's perfect. Thank you so much, Ben. If you need additional details in regards to what is covered, we can definitely address that on a one-on-one basis. Next, we're going to go over your 2 options for voluntary long-term disability. So today, the long-term disability is covered by the company. And again, based on evaluating the needs of the company, this is now moved to a voluntary type coverage. So Ben is going to go over option 1 and option 2.
Great. So again, similar to when we're talking about our life insurance needs earlier, our disability needs are going to vary a little bit person to person. So what's great about this is the company deemed it most helpful to cover for short term as across everyone that was going to have the biggest impact for you guys. But they are providing the option to cover yourself for voluntary long-term disability. Going back again to some of the same points, when you get your coverage through the employer, it's going to cost less, your plans are going to be better, and again, it's going to be all guarantee issues, so you don't have to answer any medical questions. It's significantly better and easier than if you try and go and find it on an individual basis. Now, the key things to know about this, again, it's going to cover 60% of your income, just like the short-term disability does. The major difference is it's going to pay on a monthly basis as opposed to a weekly basis. Now, what the option you have here is is you have the ability to choose the duration of your disability payment. So hypothetically, if you were to go out on disability, you're already covered through short-term disability. That's going to last 24 weeks. What the long-term disability is going to do is it's going to dovetail directly into the long-term payments, and there's going to be no break in your benefits that you receive. So what you have the option to as an employee is to sign up for one of two options. The lower, less expensive option is this 5-year duration plan. The benefit of that is, of course, it's going to be less costly, a little bit easier to afford. But one good thing to know is the average long-term disability claim when someone goes out is about 4.7 years. So this is going to cover the large majority of LTD claims that happen. Now, if you want a little bit more protection and to get true financial coverage for the full length of the disability that could occur, you can actually go out on, you can get this other option, that's the Social Security duration. So essentially, all that does is the plan works exactly the same, but instead of capping out at a 5-year benefit payment, it would cap out all the way until you actually hit Social Security and qualify for those benefits. So the nice piece about it is it really gives you the option to tailor whether you want the high or low coverage, and ultimately both are better than having nothing. One really key provision to know about here is that pre-existing condition at the bottom, and it says 312. So what that means is if somebody goes out on claim during the first year of the policy, the 12, we're going to look back 3 months prior to the policy effective date, so July 1st, to see if that person sought medical consultation or treatment. If they did, then the claim wouldn't be compensable. Now, the first question that I typically get after that is, so I'm taking regular heart medication. Does that mean if I go out on claim that I'm not going to receive any payment? It's actually not quite that. I would actually say that that's someone who should even more strongly consider long-term disability. The reason being is if somebody's seeking regular consultation or medical treatment for something that might cause them to go out on a disability, as long as they don't go out on claim for the first 12 months of being on the policy, then there's no need to, then they've satisfied the pre-existing condition. Then they've satisfied the pre-existing condition for that benefit. In terms of what the most common payments are on that, it's going to be cancer, by far is the number one. But then there's also other sorts of things. So back disorders, injuries, cardiovascular joint disorders, musculoskeletal diseases. There's a lot of things within there that at the end of the day, getting the voluntary LTD could end up being life-changing. Leticia, anything to add there?
The only thing I want to add, I'm going to back up one screen, is the pre-existing on this. I see it on the screen, but I don't know if we honed in on it at all. There is no pre-existing limitations on the short-term disability, correct?
That is correct.
Okay, just want to point that out really quick. No, nothing else on the long-term disability. The other thing that I want to let everybody know is if you currently have a life insurance policy with Sun Life, Unum will honor that policy and you'll be able to be grandfathered in. If you don't have anything with Sun Life, you will be given the opportunity to enroll up to that guarantee issue with no medical underwriting. Keep that in mind. It's very important that you take advantage of it if you can this time around. Next, we're going to go over some of the value-added features that Unum is offering.
Thanks, Leticia. So these are some pretty other great features that, again, you don't have to pay anything for that are available to you as an employee. So these come attached to your employer-funded life plan. You get an employee assistance program by Health Advocate and a travel assistance program by Assist America. So the way the employee assistance program works is it's going to give you a 24/7 access to a master's level consultant to help with any range of issues that you as an individual might run into. So it could be something as minor as, hey, I'm having relationship issues or I'm stressed at work, all the way up to something pretty serious like I have a major drug problem that I'm having trouble coping with. Of course, it's all confidential, and you actually get 3 face-to-face visits per issue per year with a counselor. So speaking for personal experience, I went for just to utilize it for work-life stress balance issues. It was actually a very seamless process. They matched me up with a local counselor that was about a mile from my office. The other thing that they did is they ensured that they were connected to my medical plan. So if after the initial 3 visits, I chose to continue seeing that counselor, I did know that it was going to be tied with my medical. So it's something I strongly recommend, especially because you get 3 face-to-face visits per issue per year. It is a very easy thing, and just something that I think we forget that we have access to, especially when we're feeling overwhelmed by whatever that issue may be. Now, the travel assistance program, it works similarly, but instead of work-life stress issues, it's for any travel issues that might come up while you're 100 or more miles from home. So again, it works on a spectrum. It could be something as minor as, hey, I'm traveling and I forgot my wallet, or I lost my wallet. Or it could be something serious as in, I'm in a non-English speaking country and I have a major medical emergency. So anytime you are dependent is 100 or more miles from home, you can call this number. We do have wallet cards available that essentially they'll help guide you through whatever that may end up looking like for you. And the one kind of piece to know about them is it is not a reimbursement service. If something happens, then you need to call them first and then work within their network and they'll cover it. There's some pretty amazing stories of people being medevaced and returned back to the U.S. for treatment, all sorts of things in some pretty extreme areas, all at no cost to the employee. So again, the one key thing to know is that it's not a reimbursement service. So keep that wallet card in handy. I personally just always have it in my dashboard in my car, especially when I'm going abroad. If anything comes up, I know I have that extra layer of protection. It's not unlike a AAA. The difference is that it's at no cost to you, and they can help with a little bit more extreme incidents that may arrive other than just roadside service.
Perfect. Thank you so much, Ben.
Yeah, absolutely.
Normally we open up for questions, but I just want to let everybody know that all of the forms, changes, elections are due by next Wednesday, which is the 19th. If you can please have that over to, yes, it is the 19th. Wednesday the 19th, I apologize. Wednesday the 19th over to Marlene DeSalle, and her contact information will be on the email that goes out to everyone with the beneficiary form and need that as soon as possible. Make sure you submit all that again by the 19th so we can get everything processed and everybody covered by July 1st. Thank you so much, Ben, for joining us on the call today.
Yeah, thank you.
Have a good afternoon.